Coming up, Mish Schneider. She joins us and she looks at what's going on in the economy and the market. She always has a slew of investment ideas. I can't wait to pick her brain. She'll be right after this quick break. Welcome back to the Watch List. We welcome in Mish Schneider, Chief Strategist, MarketGauge.com. Glad you're with us. Look, we're seeing records at this point today. Some of your thoughts now, because you said you wouldn't be surprised if this, you wouldn't be surprised if that. Why don't you go through some of the thoughts that you have here at could be a turning point today, according to Andrew Brenner, our last guest. We hit records this morning. Now what?
It's auspicious, actually, to listen to Andrew before I came on because we had so many similar thoughts. Well, first of all, we like to look at the year divided by the highs that are made mid-January. That creates a range from the lows that were made mid-January, and then again in July. And so what was so interesting to me was that we saw a lot of the stocks go through those ranges yesterday, all pretty much in where you would have expected. The growth stocks, the space stocks, the quantum physics stocks, obviously NVIDIA and the AI stocks, and then a couple of other interesting stocks like General Electric, for example, and Caterpillar. But what's happened today is that the S&P and the NASDAQ, which also was starting to take out that range, has now turned down. So now what's interesting about that is this is exactly what happened in January as we got into February. Everybody got super bullish at the highs, and then it turned down, and even though we had a couple of gyrations in between, we saw the trough finally in April. So it's possible that we could see the same thing. I wouldn't get too negative, but I would certainly keep my eye now on these July highs. We have to really convincingly take them out, I think, to think, oh my goodness, we're going to go for another leg higher. We could chop around here for a while. So that's the first thing.
Yeah, understood. I mean, and you said, look, inflation could rise, and bond yields, will they fall?
Well, certainly this has been a year where you cannot dismiss the headlines that come out of the Trump administration, particularly when they are relentless. And so some of those headlines, like, for example, cryptocurrency. We just saw the Genius Act pass. We see tokenization becoming more and more a thing. This is what the Trump administration wanted. We see tariffs, even though he has sort of modified his stance somewhat, we're still seeing tariffs. The big, beautiful bill, he wanted it, he got it. So now what does he want? Over and over and over again, if you look at X like I do all day long, what you see is headlines coming out from the Trump administration, lower the rates, lower the rates, lower the rates. So I don't think it takes a genius to figure out that one way or another, those rates are going to come down. And that's why I'm watching the long bonds in particular so carefully. They measure a lot of things, where inflation's going, risk off, risk on, essentially what would happen to the consumer in the areas that have been stymied, like housing, et cetera, and what happens to inflation.
So it's interesting. So rates come down, and is that favorable, I guess, in some ways for certain things, obviously? How do you get that do for investors who want, I know you have some stocks here that you like. Tell me the kinds of stocks you like in this environment.
Well, for one, if the rates come down and the dollar is coming down, that really does help commodities. And commodities have been all over the map, very volatile this year. Obviously, the inflation numbers versus what we're seeing in terms of it's bottomed, looks like maybe it has bottomed. There's a lot of pressure now on prices potentially to go up. And I'm not even going to blame tariffs for that. That's just the way of the world with supply and demand, particularly if we're talking about energy stocks. They've been undervalued. I would still look there. I think you have to look at the underlying. Obviously, we're looking at oil. Oil right now, especially we had a big announcement by British Petroleum that they're basically scrapping clean energy and looking back at the old-fashioned oil and gas. Well, oil has to get through $68 a barrel. Natural gas, I'd like to see get through like $3.70. And I think that could mean energy would take a nice lead here after being behind. And also, I mean, obviously we've seen an amazing move in uranium, but solar and wind have gotten so beat up because of the headlines, but you cannot necessarily have an energy grid working efficiently without as you mentioned, I saw at the top of the show, all hands on deck in terms of energy. So that would be one thing. But I'd also look at the softs, right? Sugar, which now, by the way, cane sugar in Coca-Cola potentially, which may raise the price of Coca-Cola, also puts a lot more demand on sugar that has been in higher demand during bad times, right? People reach for it. So I think we have to watch the sugar that got right up to 17 cents a pound. If it gets through there, again, the rates coming down would only goose all of that. But that's one area. The other area, of course, would be for the consumer. The consumer has lagged this whole rally. Poor XRT, my granny retail, is stuck in the middle of the July range, not really wowing anything. Obviously, the consumer today came out optimistic, but we're not really seeing that in the price. So I think that could get a boost. And of course, some of the real estate areas could get a boost too, as mortgage rates are pretty darn high right now.
You said you like dating apps. You had Bumble and Match. Do they have potential? You mentioned those. You had Elf and Ulta for beauty. You had Etsy and Stitch Fix and AbbVie, right?
Well, we've talked a lot about this, Nicole, about the whole thin economy. And I'm really getting more and more excited about it. I tend to be early on these things, but the diet drugs are changing the world, and they're changing habits of a tremendous number of consumers who now for the first time are thin and plan to stay thin. So we're looking at these companies that create these drugs. Eli Lilly does Mounjaro, which is huge because it fights diabetes and makes you lose weight, but they haven't done anything yet. But instead, also look at the spending habits. So that's where we're looking at Elf, which has made a nice move in the last couple of days, bounce off of a technical support. Ulta's been doing incredibly well. Match.com and Bumble have done okay. I don't think they're wowing anything, but that could be another area that we're going to look at. And then beauty. Stitch Fix is coming out from basically the dead. We're seeing Urban Outfitters, Garmin, which does a lot of exercise technology. I think you just have to think what's going to happen regardless. Recession, no recession, stagflation, or we just go into a major recovery because everything works out at the end. This thin consumer is here to stay.
Yeah, and for the bonds, you said you're watching the long bond. How would you purchase in a portfolio for fixed income? What do you want in the portfolio?
Well, what I'd like to see is TLT's clear. Well, they held, we talked about that calendar range low. In July, that low was 84.90, and I heard you mention that before I came on. That's a key support area right now from a very short term. If we get through 85.70, and last I looked it was about 85.35, I think that tells you that buyers are coming in. And I know Andrew talked about it in terms of actual yields under 440. You can look at it that way as well. But I think that would be, like I said, not only would he mention short squeeze, but I think it would be a good low-risk opportunity of fade the crowd for sure, and then we could see what happens from there. And by the way, last thing we have to mention is gold to silver. That ratio has come down too. That's another inflationary consideration if silver continues to outperform gold. So you kind of have it all together, the dollar, the rates, the silver to gold, the possible softs, the energy sector. All of that can be a new formula for the end of 2025.
Mish Schneider, Chief Strategist, MarketGauge.com. It's wonderful to see